Good morning, everyone. Thank you for joining our first official meeting for Trial Furniture Corp. Senior Bahar. Let's start with brief introduction. I'm Jasmine, and I'll be chairing the meeting today.
So good morning, everyone. I'm Balkis, responsible for overseeing the financial planning and capital management.
Hello, I'm Shura, and I will be managing factory operations and production logistics.
Okay, thank you. To begin, I'd like to confirm the company's official name is Tri-Craft Furniture Co. Senior Bahar. Our registered address will be number 22 Jalan Industri Kayu 5, Taman Industrial Bukit Raja Kelang. The business start date will be on the 1st May 2023. Okay?
Ma'am, just to clarify, since the business start on 1st May 2023, our basis period for the first year of assessment will be from 1st May 2023 until 30th April 2024, correct?
Exactly, Balkis. For subsequent years, the financial year will end on 30th April annually.
Okay. So let's discuss our core business activities. Tri-Craft specializes in custom wood, furniture, tables, chairs, cabinets, beds, and other bespoke pieces. We will emphasize quality craftsmanship and suitability on timber sourcing.
I'd like to add something that we should explore eco-friendly finishes and innovative design to different ourselves in the market.
On the operation side, we will need to ensure our suppliers meet sustainable sourcing standards and that our manufacturing process comply with Malaysian wood industry regulations.
Okay. So regarding the capital, the company has 500,000 fully paid up by stakeholders to cover factory setup, machinery, and working capitals. Alright?
But with the capital, I suggest we prepare a detailed budget breakdown to allocate fund efficiently. I will draft this and circulate it for you.
Alright?
I think we should prioritize machinery acquisition early to avoid delays in production.
Okay, so let's assign responsibility. So company registration and legal documentation will be handled by Balkis. Then licensing and compliance also by Balkis. As for you, you'll be focusing on factory setup and machinery procurements. Alright?
Okay, I'm agree with that.
I'm also agree with that.
Alright. So any final questions or comments?
Just to confirm, when should we schedule our next meeting?
Let's meet again in 2 weeks to review our progress. Thank you for your contribution. Meeting adjourned. Thank you for joining the session. Our goal today is to review the projected tax position for the upcoming financial year and align our operational and financial activities to optimize our tax outcome. So we have to understand our tax outlook is critical for strategic planning, right? It affects cash flow, investment decision, and risk management. So as a board, it's important to have visibility into these projections and ensure all departments work collaboratively to manage our tax liabilities efficiently. So we'll be walking through the operational input and then financial inputs, key planning opportunity. I'm looking forward to your inputs throughout the decision.
Thank you. From an operation perspective, our tax position is directly influenced by our production plans and capital investment. Next year, we anticipate maintaining our current production levels with some planned investments in new machinery and equipment. These capital expenditures are important because they impact our depreciation schedules and may qualify for tax incentive.
Alright.
Operational efficiency also play a role in managing costs, which affect our taxable income. Additionally, certain activities like energy usage or research and development may provide opportunities for tax credits. It is crucial that we communicate any significant change in operational plans yearly so finance can incorporate this into the tax projection accurately.
Correct.
So, building on that, I walk you through the structure of the project tax computation. Okay, starting with total revenue, we subtract the cost of goods sold to arrive at a gross profit. Next, operating expenses such as salary, overhead are deducted to calculate operating profit from EBITDA. From there, we account for depreciation of fixed asset and interest expense. This adjustment leads us to taxable income, which is the basis for applying the corporate tax rate. Finally, we consider any tax credit or incentive that the company may be eligible for, such as those related to capital investment or specific industry activity to determine our project tax payable. Our assumptions include no major change in tax legislation, steady revenue and cost forecast, and planned capital expenditure proceeding on schedule. Key areas to monitor closely include timing of capital investment, operational cost control, and qualification for available tax incentive. Before year end, we should consider opportunities like accelerating depreciation or maximizing eligible credit to optimize our tax position.
Alright, so to wrap up, summarizing, our next step is for the operations, we'll confirm the timeline for any planned capital expenditure, and then finance, we'll finalize depreciation and interest schedule and continue refining the tax projection. Alright, so we'll review potential tax credits in collaboration with our tax advisor. Keep our communication regularly between departments is essential, right, to capture any changes that affects the tax outlook. So we'll schedule a follow-up meeting later in the year to revisit these projections and make adjustments as necessary. Okay. Thank you all for your attention and collaboration. I now open the floor for any question.
So far from operations department, no any questions.
Don't have any questions.
Thank you all for your attention and collaboration. So thanks to your insights and attention today, we've gained a clear understanding of the tax outlook for the new year and how it aligns with our strategic goals. It's vital that we maintain strong coordination across departments to manage our tax position efficiently.
To support that, we will ensure timely updates on any changes in production plans or capital investment that may affect to tax projections. Clear communication from operation will be key to capturing all relevant factors impacting taxable income.
So from me, the final perspective, we will continue refining our tax computation and monitor eligibility for incentive closely. We work closely with board operation and the board to update forecast as needed and provide timely report to support decision making.
Okay, so we will be scheduling a following up meeting later in the year to review any updates and adjust the plans coordinately. Okay, meanwhile, please feel free to reach out with your any questions or any new information. Thanks again, everyone, for your collaboration today. So I would like to say, meeting has been adjourned.
Good morning, ma'am. Miss Sheila. I appreciate your time today. The purpose of this meeting is to present a comprehensive overview of the three craft furniture tax position for the fiscal year ending April 2025. I hope you saw the financial summary, our tax obligation, regulatory change, compliance activity, and tax strategy for the upcoming fiscal year. If you have any questions as we go through, feel free to interrupt. I'll be happy to elaborate.
Thank you, Balkis. Tax is a vital area, especially with the evolving regulatory landscape. We will keen to ensure our approach remains proactive and compliant.
Absolutely. And I'd like us to pay special attention to risk area and any planning opportunity, especially ones that might affect any long-term strategy, right?
So as we can see, we submit our annual corporate tax return to the IRP on April 15, 2035, well ahead of the deadline. We made this advance payment throughout the year in line with our forecast income and completed the final reconciliation in quarter 1, 2025. There are no outstanding tax due or penalty on record.
Good. It is important we maintain our clean record, especially with increasing scrutiny from authorities.
Okay, so some notable development this year include capital allowance. We accelerated depreciation on new machinery purchased in quarter 3 under the 100% first year allowance rule, reducing our taxable base. And next, transfer pricing compliance. We update our documentation for intercompany taxation. We now meet OECD standard, which strengthens our audit defense position. And last, technology integration. We adopt cloud-based tax software, which has improved our reporting accuracy, audit readiness, and reduced manual processing error by 35%.
Are there any changes to tax legislation that may affect our deduction next year?
Yes. This purpose will introduce limit on interest expense deduction for leverage business, which may impact our debt restructuring plans, we're working with legal counsel to model the potential effects. Now, in terms of compliance, no penalty or late fees occurred during the year. We conduct an internal audit in February 2025 covering bad filling, payroll tax submission and corporate tax, risk areas monitored, cross-border service invoicing, withholding tax application for internal consultant, upcoming digital service tax regime to be introduced in 2026. Our external auditor have completed their review and issued an unqualified opinion on our tax provision.
Excellent work on staying ahead of compliance. I'd like the team to prepare a memo on the digital tax implication before quarter 3.
Absolutely. We are already gathering the latest draft of the legislation to simulate impact across our product offering. Looking ahead, here our tax planning roadmap. Quarterly tax forecasting. We implement quarterly review to update projection and assess the impact of business changes. Second, green investment incentive. Restructuring of our Singapore branch may allow us to improve efficiency and reduce exposure to double taxation. And last, capital investment planning. We aligning capex decision with depreciation schedule to optimize deduction.
Alright, that's a good approach. Just make sure that we are balancing tax efficiency with operational flexibility. We shouldn't structure ourselves into corners, right?
Agree. And we evaluating all time with both the tech and strategy lines. So, to summarize, we are fully compliant with all tax obligations for 2024. We have effectively utilized available credit and allowance. No major risks were identified, but we are monitoring legislative change. And our strategy for 2025 include better forecasting, use a tax efficient incentive, and close alignment with the company financial and operational goals.
Okay, thank you, Bagis, for the detailed report. Please include this in the board's financial plan and ensure that the tax planning roadmap is realistic mid-year.
Yes, and keep us posted any high impact policy changes occurs, especially those with international or digital components, right?
Of course, I circulate a follow-up document with the full tax summary. Audit highlight and next step within 2 business days. Thank you both once again for your time and feedback. We committed to maintaining strong governance, transparency, and strategic tax planning, and we move forward in the next week.
Okay. Meeting adjourned.